Meredith Jones, let's get to the facts. Are women really better investors than men?
Well, I think one of the key takeaways from the book is that women and men do, in fact, approach investing differently. And when you look at those approaches within a diversified portfolio, what you can see is that the cognitive and behavioral alpha that is generated, or the returns that are generated, as well as the diversification benefits, make a very strong case for having investments with female-run funds. And so I think that as we go forward, what we'll find is that wise investors decide that it's just as important to look not just for the next George or Julian or David, but also for the next Fran or Leah or Marjorie.
Well, one thing you point out in the book is that men tend to be overconfident when they trade, and this hurts them in the long run. So I guess alpha males aren't getting that alpha after all.
Well, the problem with being overconfident is that you tend to think that every idea that you have is a good idea. So if you feel like you should sell, you sell. If you feel like you should buy, you buy, because you have a deep-seated belief that that you're right, that even if the market is telling you different things. And so as a result, men tend to trade significantly more than women do. And as a result, that tends to erode their returns over time.
Well, you also say that women are better out-of-the-box thinkers. Can you expand on that and how it helps women as investors?
Well, women tend to do a very good job of avoiding the herd. You don't tend to see them all clustering into the same stocks. Like, for example, last year, there was an article that came out that showed that about 15 of the largest hedge funds all had positions in AIG. When I interviewed the women for this book, I didn't see any investing in AIG. They were all looking for things that were off the beaten path, whether that was venture capital that hadn't, in new ideas and things that hadn't been in TechCrunch at that point, whether that was in international small caps, whether that was in club-sized deals, within the credit world. They were all looking for something that was different because they felt like in order to generate returns, they had to be in a space that not a lot of other people were.
And you also say it's chemical as well, because women having less testosterone helps them because they're less reckless. Talk about that aspect.
Well, you know, there's really three things that contribute to why women tend to generate such great returns within a portfolio. The first is biology. You've got testosterone, and that interacts with stress hormones like cortisol. You also have brain structure that's very different between men and women. Things like the amygdala, which is one of the oldest parts of your brain, regulates how you deal with stress, your fight or flight, and it is larger in men than it is in women. You also have things like the nucleus accumbens, which is the pleasure center of the brain, and that tends to impact risk-taking behavior, and that can have an impact on trading. And then once you get past the biology, you also have some cognitive factors as well. So how women perceive risk and probability. Women tend to have a much flatter probability weighting curve, and so they tend to inflate prices less than men do. As a result, when you put both of those things together, what you end up with is very different behavior.
And then finally, clearly, there are not that many women fund managers out there, and we need more. And if it's the case that people can actually make more money with women fund managers, how do we get more of them onto Wall Street?
Well, it's really a pretty dismal situation at this point in time. If you were to look at hedge funds, for example, for every man named John, James, Robert, or William, there are 11 men with those names for every one woman. If you look at men with those names on the private equity side, there's 6 men with those names for every 0 women in the industry. There's currently an 80-to-1 ratio of male hedge fund managers to female hedge fund managers. So the situation is not good. But what I would say is that one thing that motivates Wall Street more than anything is profits. And so if there is a demonstrable benefit to investing with women, either through additional return generation, through having fewer market bubbles, or through having additional diversification benefits, I think that because the market ultimately is efficient, it will come around and that hiring will start.
All right, thanks a lot, Meredith.
Thank you.
Thank you for watching The Street.